Hello everyone, this is Aryan and welcome back to Stock Market University. Today we'll be diving into the depths of price and volume analysis. Now, volume is, according to me, one of the most important indicators to learn when getting into stocks, perhaps one of the first ones you should learn, which is why this is such an early video in the beginner's course of technical analysis. Now, what you can do is when you open up TradingView, of course volume is already on your chart. What I want you to do is just go to volume, press the three dots here and move this to a new pane below. I like to do this just to get a clearer picture of what's happening and also to apply indicators to the volume, which we'll do by going here again on the volume, press the three dots, add an indicator on this. We're going to add the EMA, moving average exponential. Once we've added the EMA, we can just gonna change the settings of the EMA. Gonna change the length to 200. Alright, that creates a really flattish line for us here to see. Sorry, hold on, there we go. Now what you'll notice is 200 EMA, of course, most of the candle bars, because it's such a long exponential average that we're choosing here, most of the bars are just about the same height, slightly under, slightly over from the 200 EMA. What we're looking for really in this type of analysis with the 200 EMA is bars that are either growing in size continuously on a single side, as we see here, price going up, volume also going up. Let me just draw this out for you, zoom in a bit here, volume going up, price going up, you can see that there. This results in, as you can see, continuing price action in the same direction. Remove the drawings. Now, another way to interpret volume is, as we kept on getting up there in the price, right? We've gotten up from here where the increasing volumes were. We saw a bit of a dip in the share price here, right here. Hold on. See right here, we saw a bit of a dip in this candle, this one right here, but we saw a recovery with a huge volume candle, almost double the size of, or more than double the size in fact, of the average 200 EMA candle, which we see is the blue line here. Let me just make this a little clearer for you guys as well. Change the thickness of it and perhaps make it white so it's just really clear. Right, there we go. Now we saw the huge volume reversal candle, continuing momentum from there, but when we got up there in price. Now you'll also notice I'm using a 4-hour chart for this, just because volume is more accurate, more consequential when we're looking at longer time frames, because to create a huge volume bar like this one in a share as big as Apple on a bigger time frame such as 4 hours, a large amount of money is pushed into the share. Large amount of money obviously means bigger buyers. We call those smart money, big money, whatever you want to name them. They usually know what's happening in the markets better than the average retail investors. We're talking about huge hedge funds and the likes here. These guys have huge sums of money. Even if they're wrong, sometimes they can make themselves right just by pumping more money in the same direction. So we want to stick to the smart money basically, which is indicated by these huge volume bars. Now, but when we got up here in the price, volumes started to decrease. If we saw increasing volume throughout, price could easily break out above these previous high levels of 200 and perhaps make new all-time highs for Apple, or at least in recent times all the highs would be broken. But since the volumes started decreasing. For now, there is no continuing momentum. As you can see, it's pretty much flattish, going a little bit up, a little bit down, and it's unlikely to sustain unless we see another increase in volume with the price increase. It's probably gonna stay here, or even more likely is for it to fall a bit more if we don't see continuing or growing volumes from here. Right. So let's see a few other examples. See if we can spot any volume trends. Let's go to, for example, something with huge volumes. Let's say Ford. Why not? Not Forward Industries. Ford Motors. Maybe that's the wrong one. Sorry. Ford on the NYSE. That's the one. All right. And then on the 4-hour chart, we see, because this is such a huge share, of course, Ford has a huge market cap. Most of the candles are just at about the 200 EMA, and price momentum is not really seen that well here. But when we got here, we saw a huge sell off candle. Within the same 4 hours, the momentum pretty much died out. We saw increasing volumes. If you notice here, we saw decreasing price with decreasing volumes. Now this is the opposite of price and volume going in the same direction. Here, when price is going down and volume is going down as well, they're both going in the same direction. Actually, scratch that about the directions. I'm sorry, that's not how this works. When What you got to understand is, when price is going up and volume is going up, it will continue to go up. Price going down, volume going up, it will continue to go down, the price will. But in either case, if the share is going up or going down, if the volume is going down, that momentum will not continue. Either it will flatten out or change directions. So here, when the price was going down, but the volumes were going down with it, despite this huge volume candle. That's why some people, what they would do is, they see a huge volume selling candle, they say, oh, that's huge volume, that's big money, enter it right away, but they won't get too much of a momentum, and the share eventually is making higher highs. It's showing a reversal pattern here. If it breaks out above this, it could probably move on to higher levels, close to 1150 or the likes. So yeah, we would have waited for a few candles here. Price went down, volume went down with it. That's a sign for a reversal. We might take a reversal trade here, or when it retested the level of 970 around this time, and get some good profit out of that. And also prepare for a breakout of this level here, which could come soon. That's pretty much it for volume. What we can do, of course, is combine this with other indicators, but combination trades are, while they have a higher chance of success, they're also harder to execute and to find in markets. So we'll move on to those a bit later in this course. But thanks for watching this video. If you liked it, please do like and subscribe.